Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power. With me today are Steve Crutzen from JD Power. Steve, welcome.
Hi, Mike. Happy to be here.
We also have Craig Martin from JD Power. Craig, thanks for joining us today.
Yeah, great to be here, Mike. Thanks.
So the topic for today's podcast is we're going to talk about distribution of insurance, and specifically we're going to dive into agents. So before we kind of dig into the meat of this, why don't we just start with um, the relative importance of distribution and agents to the insurance industry, and what does that look like today in terms of? I know we have independent agents and captive agents and that kind of thing, but Craig, why don't we just kind of start off with what does the landscape look like today?
Yeah, so increasingly we're seeing companies go or carriers go to the independent agent market. And so we've seen that be on the rise. We still have some large carriers that do rely heavily on captive agents, but that has been kind of falling over the years. As you see more direct consumers coming in, you can obviously that's a competing channel, but the agents still represent the majority of policies that are written today. Over 60% of policies are being done through an agent, and that they're incredibly important when it comes to commercial. Again, that more complex policy and more challenging kind of relationships that require more expertise and knowledge. So again, agents, while many have surmised that they might go away, have continued to remain a critical part for most customers in terms of their engagement, how they're choosing which carrier to work with, and that relationship.
Why do we think that insurance agents are still there? Like why are they so important to the experience for consumers?
Obviously, I'd love Steve's perspective on this, but I think part of it is just there's this inherent view of complexity that consumers see with insurance. They don't understand it. They don't really get all of it, and they don't want to make a mistake. It's a really important thing. I mean, you're protecting your home, your auto, some of the most important things in your life. You don't want to make a mistake. And so you want an expert. While you can go out and maybe when you're kind of just getting started, you got an apartment and you've got a basic car, you aren't too worried if you make a little bit of a mistake. But as you get older, you really can't afford to lose your home to make bad choices. It can be very financially catastrophic for you. So I think consumers continue to want that expert opinion, that advisor, guidance that only comes from an agent, from a human. They don't trust themselves to make those decisions. In the complex nature of insurance, especially as you get into more, whether it's commercial or other complex products, requires more expertise, and that's why I think the agents continue to be really critical for the industry.
Yeah, Craig, you really hit the nail on the head there with the expertise issue and the fact that whenever we talk about consumers and insurance together, we have to talk about the lack of understanding consumers have around the product. It's a hard product to understand. And as you talk about small businesses and commercial lines, Craig, even more difficult to understand. Another part of it, too, is with the recent massive increase in shopping that we've seen, consumers, if they're talking to an independent agent, can feel some level of confidence that that independent agent is shopping their business around to multiple different carriers to find them the best fit, the best premium, the best insurer overall for them and their insurance needs, versus having to do that through online channels or doing it on their own. An independent agent can find the best fit for them across a wide swath of carriers.
So, Craig, just to make sure we're level set on definitions, what's the difference between an independent agent and a captive agent?
So if you think about it, an independent essentially is they're not employed by the carrier. The captive agent, you could think of them as a independent contractor, but they only sell the products, kind of a franchisee. So it's like going to McDonald's. You only get McDonald's food at McDonald's. That's the same thing for a captive agent. You're only going to get the products that carrier sells through that agent. They're not going to be out selling other products and services. An independent agent potentially is going to write business, both personal and commercial, for multiple brands. So they, again, as Steve mentioned, they can be shopping you around, comparing different providers may have different solutions and value props. Again, they have, some may cover certain segments. They might have certain products and services that others don't. So they actually rely on multiple carriers as partners, and then they're going to write business for all of them. that they're appointed with.
Okay. So I want to double click on the relationship between the agents and the carriers. I know we do a lot of research in this area. We interview thousands of agents every year. We publish a study around independent agents. So when it comes to that relationship between the agent and the carrier, what is important to the agent in that relationship?
Yeah, so if we think about, we'll start basically with our index model. And so if you think about the index model on the personal side, again, we're looking at the same things for personal and commercial, but for personal, we find that product competitiveness, the compensation, operational support, those tend to be kind of the most impactful and important. Other items like servicing the clients, business support, ease of doing business do matter, but they're a little less important. On the commercial side, again, same elements going into the model, but we find that servicing of clients and ease of doing business tend to have the most importance, followed by product and business support, operational support, and finally compensation. And I think that key difference that you see there on the commercial side is driven in large part because of the nature of those relationships. I mean, personal tends to be, again, more large volume. You've got more customers coming through, and it's about, I got to have a competitive product, especially in the recent environment where you've had a lot of rate increases, a lot of pricing challenges. That's really critical. That if I don't have a competitive product price wise, I'm probably not going to be doing much business. On the commercial side, those relationships are much larger. They're much more potentially big in terms of my whole business. So I want to make sure you're taking care of my clients really well if they're my commercial clients, and you're easy to do business with. I've got to make sure that, again, what we are delivering is really key to that relationship, because that client is so important to me. If I lose one personal client, not that big a deal. I lose one large commercial client, could be massive hit to my business.
So how's the industry doing in terms of meeting these expectations? Where are they meeting the expectations, and where's just on average, where's the industry falling short?
you know, there's kind of there's some dynamics that are going on, because I think, we have a lot of agents saying they don't really feel fully valued. And I think the challenge has been, again, we've talked about the pricing and rate environment that we've been in. It's really hard from an agent standpoint because they're on the front lines. They're the ones that are taking the heat when premium increases are occurring. They've got to explain it, they've got to communicate it, and therefore, yeah, they're really challenged. So I think in many regards, they're feeling left out on an island. In some regards, we see a lot, we see pretty high numbers of folks saying they don't feel fully valued. And so when we think about like what's important to them, at the very basic level, it's like, I got to have product to sell. If you can't provide me a competitive product to sell, and you help me to get my customers quoted and underwritten and get them a policy, there's not much else to do. I mean, you could have a great compensation plan. That's wonderful. But if I can't sell that product, then we really aren't talking anymore. And so we're seeing that there's been a lot of challenges, whether it's carriers exiting markets or just pricing in a way that is not overly competitive. That's created a lot of challenges for that agent. And while satisfaction has been pretty strong lately, again, and the numbers aren't bad, we do see a lot of folks saying they're feeling fully valued. So again, that dynamic also in the independent agent space is the size of the agency does matter. So what you already have in terms of resources, if you're a small agency, you don't have a whole lot of internal resources and support and other capabilities to rely on. The larger agencies are going to have those capabilities, so you aren't asking for as much from your carrier partner. So we are seeing that dynamic of, again, what do I need? And again, if you're a big agency, more carriers want to do business with you because you've got more customers to work with. You represent more value, quote unquote, to them. So I think that dynamic has been a challenge where you have a lot of agents who feel like maybe they're not being treated the way they would like. They aren't valued there. And that impacts how they want to do business and who they want to do business with in the future.
And are there any carriers that are doing a better job than others when it comes to meeting the needs and the expectations of the agents?
Yeah, I mean, I think there's always a dynamic around, again, the agency size and what kind of agencies those are. I mean, we see obviously our award winners like Erie and other high performers like Cincinnati and Auto Owners. Again, they tend to be oriented towards some of the more regional kind of players. Again, they're large, but they're not to the level of some of the national players. And so we are seeing that, again, some of that push from a national players, has impacted kind of the overall satisfaction scores and how they rank. Again, they've got a core contingent of clients, i.e., agencies that really love them and do great work with them. But a lot of their clients are feeling the impact of kind of reallocation of resources. We see that. We did qualitative interviews, and we hear from many of those agents who are at smaller agencies. They feel a little bit kind of lost, whether it's, they lose the support, operational support, they're losing access to underwriters, kind of teams and support that they're used to or they had historically. And so we are starting to see that dynamic where the ones that perform the best really are seen as long-term partners, where
Hmm.
others who are making business decisions and kind of swapping out is lower levels of satisfaction.
Okay, so if you were having a cup of coffee with the head of distribution at a carrier, and their goal was to increase share of wallet with independent agents, what kind of coaching or advice would you give them?
I think step one is making sure you have a clear definition of your target partner. And I think what some of the dynamics is, there's this, sometimes people will use almost like, how many agents they have appointed. Oh, we've got tons of agents appointed. People are coming to us all the time to want to write our business. That's a nice thing to have, but are you focused on the right groups? Do you align your capabilities, your resources, everything about your business with that, the target market you're going after? Because I think too often, this idea of like, oh, everyone wants to work with us, that's not always a good thing. That means maybe you don't have clarity about what you're really good at,
Mhm.
but it also impacts your resourcing. So if you're trying to work with lots of different agents, you may not be actually effectively delivering the service to the core group that really is your bread and butter, the group that actually is going to drive better share of wallet, better business for you. So I think that the first thing is make sure you're very clear about who you're going after and making sure that you're designing, everything from your portal to your distribution network and the folks who are on the ground working with those agents, meeting with those agents, the training, everything that you're doing, is it aligned with the business you want?
I think to put a fine point on it, when I, in my history working in the industry and working with independent agents, if we put it in one sentence, is make it easier for the agent to grow with you, and they're going to grow with you.
Mhm.
A number we saw in previous years in the independent agent study was those that are more satisfied with their carrier send 3 times as much business to the carrier as those that are in the middle or kind of on the lower end of satisfaction. And Craig's touched on many of the things that drive satisfaction, but in one sentence, really just make it easy for them to write policies with you, and they're going to send you more business.
That's a great point, Steve. Yeah, anything come to mind in terms of an example of what would make it easier for an agent to do business with a carrier?
Yeah, Craig touched on a lot of things. I'll point to one specifically. Just your underwriting appetite. Are you aligning with agents that are sending the kind of business that you want to write? Especially in commercial lines. There's a vast array of different kinds of industries you could be writing, the sizes of businesses, the risks they represent. Are the agencies that you're appointing to your business finding the kind of risks that you want to write, or are they sending you risks maybe based on their geographic location or their own personal history of what kind of business they like to write? Is their risk appetite aligned with yours, and vice versa? That's lately been one of the bigger challenges too, with the hard market we've been in, of finding the right kind of risk that an insurer wants to write, and not having the agent waste time filling out a quote application just to find out the insurer doesn't want to write that small business or write that consumer, and the agent felt that they wasted their time.
So, Craig, traditionally our research has been focused on agents that sell property and casualty insurance, but I know we're kicking off a new research program that would be focused on life and annuity distribution. What do you expect? Do you expect any differences between the two?
Yeah, I think there's going to be a couple of key differences. So one is that if you think about the life and annuity distribution network, they're selling a really different product, and it's oftentimes kind of additive to other products and services they're selling. So how do you become part of that ecosystem? So how does technology work? How does communications work? Particularly in annuities, it's a very complicated product, and so again, you're not going to get folks who are selling that to be complete experts in many cases. So how do you effectively deliver that support needed? I mean, think about a P&C side, those folks become experts in their products. They really know what's going on. On annuity side, probably not as much because it's just a small part oftentimes of their business. So I think, digital and kind of the support that is provided are two of the most critical things. The other thing is the dynamics of kind of the agent referral and if I'm getting appointed to sell your product, there's a more kind of rigorous when you think about to sell annuities. Depending on the type of annuity, you have to have a certain level of expertise and licensure, and so there's a little bit of a different threshold that's required. And as part of that, again, there's kind of this demand that is required of the engagement, the relationship. Do I really see the value of working with you as a carrier or as a product provider? That I think is, again, as Steve mentioned, in the PNC space, I need product I can sell. There is that in the annuity space, but I'm going to be a little bit more critical because I'm selling to my client base, existing client base, an additional product, i.e. an annuity. I want the best. I want to make sure I have confidence, not just the product is good, but the people behind it and supporting it so that my clients don't come back to me later and go, what did you do to me? Why did you put me in this product? They have a terrible website. It's hard to get support. I can't call anybody. I've got lots of questions. They don't want to create more work for themselves. So they really are going to be focused on different capabilities and similar, but I think there's going to be some differences that are really distinct, particularly in that annuity space.
Okay, just to kind of wrap up then, looking forward, um, where do we, especially with AI, where do we expect the future importance of the agent to go in terms of the relative importance between that agent consumer relationship, number one, and then number two, what do we expect to change, or where are we going with that agent and carrier relationship?
I think the agents will continue to be incredibly important. The complexity of insurance hasn't gone away. And in fact, I would say that because there's such a strong push for kind of direct sales, the balance to that, and if you're either going to be commoditized into, it's all about price, but then what's the value exchange? And you see more and more carriers are starting to look at how to present value. How do I change what it means to be an insurance partner? So I think, and that comes through that human relationship, understanding what consumers are really trying to do. I mean, people don't tend to really want insurance. I mean, it's protection, it's confidence and comfort. They can sleep well at night. How do you build up that kind of personal relationship and personal understanding? That's going to be really critical. So enabling that and empowering agents, I think, is going to be the key going forward. But yeah, agents to me are going to be part of insurance going forward for a long time. Now it's a function of how do you enable them to be more effective representatives of the brand and really deliver on a promise that is taking you beyond commodity of product and price, but it's something more. It's about really connecting with people's financial needs.
Well, Steve, from the consumer point of view, does that make sense? Is that kind of aligned with what you're thinking?
Yeah, I mean, I remember when I joined the industry back in the year 2000, 25 years ago now, I was told by 2010 there'd be no more agents left. And then in 2010, I was told by 2015 there'll be no more agents left. Around that time, people stopped saying that because they realized agents aren't going away. There's been growth in digital quoting, digital shopping, etc. But what really resonated with me from what Craig said was the more complex your insurance need, whether you're a consumer or whether you're a business, I think about a medium or large commercial client, the more likely you are to want to talk to a live person, especially a local agent who's in your community. They understand the risks that are present in your local community. They understand how people operate in your local community, etc. And they can bring a more personal relationship. Especially as you get more complex insurance needs, a multi-line personal lines customer, a medium or large commercial business. This is still a people-oriented business to those folks. Yes, a monoline auto customer is just shopping based on price. They don't really care to talk to a person, no personal relationship needed. But the more complex insurance needs, as far as we can see into the future, these people, these consumers or small businesses, large businesses, still want to have a personal relationship with someone that represents the insurer that they can trust.
All right, Craig, last question. What's the JD Power call to action for the industry? How can the industry do a better job of meeting agent expectations and improving the agent satisfaction scores?
We talked about this a little bit, but I think it's really focusing in on that foundational piece. And that doesn't mean changing up your risk appetite or things, but it's better communication. How do I effectively communicate and align? And Steve mentioned this earlier. If I'm not having a good discussion and understanding what you're trying to write and what I'm trying to write and making sure we're meeting in the middle, then we're going to waste each other's time. So I think, at the most foundational level, start there. Make sure you don't, if you've got people, submitting stuff that, you're turning down 75% of the time, there's a problem. That's an early indicator. That's a red light flashing. Take and get your attention on that, because you're wasting their time. You're wasting your own resources. That is I would say, before you go anywhere else, start with those foundational elements. Make sure you have those right. And that also goes to, do they understand your compensation plan? So people get really frustrated when they don't think you're very clear and transparent about how they're going to get paid. So I think those two pieces, start there, those foundational levels, and then start working up from there. If you're failing on those, which over 40% of commercial and personal agents say the carriers they work with are failing on those, you address that first.
All right. Well, Craig and Steve, thanks so much for joining today.
And pleasure. Thanks so much.
Thanks, Mike.
We want to thank our listeners as well. I want to thank our producers, Carolyn and Dan. And I'm Michael Vermillion with JD Power, and we'll see you next time.